Recession, recession, recession. You know, that's what we hear about all the time, which makes basically negative GDP growth, which basically doesn't mean a lot to a lot of people. But what it does mean is a way to make people really, really rich every single time a recession hits for those that know what they're looking for and can learn from each recession we have on those hot items. So I wanted to hit my 5 top hot lists of things to know when a recession hits. First, look at leveraging your equity, whether this is through a home equity line, whether this is pulling cash as a cash out refinance, to go ahead and accumulate the ability to get some cash to invest, right? So use the assets that you have to leverage, not over leverage them, but leverage them to have the ability to be in the game and play, right? If you don't have the money, well, you can't play the game. So look at making sure you don't have a bunch of money just sitting there in equity in properties or sitting there as a free and clear car that you never drive or something like that. Tap into some of that equity, leverage it so you can be in the game. Number 2, watch for defaults, okay? Defaults. Obviously, a default is for people that are not making payments, right? Whether this could be a car note, a boat note, it could be houses, most importantly, businesses, you know, tax liens, these types of things. Defaults occur in a recession, and many times these defaulted assets can be purchased for significant discounts, right? So this can be a wide variety of things, from people that need to fire sale a car to go ahead and purchase it and then turn around and flip that car if you're not in the housing market yet, or somebody that's going to go ahead and needs to get rid of a mobile home and you can't be in the big time real estate market yet and you can buy a mobile home and get it fixed up and cleaned it and flip it. So watch for defaults. Number 3, divorce sales. What happens? What do people fight most about? Money and infidelity. Okay, it's simple as that. Well, what happens when you go into a recession? People fight about money a lot and divorces spike. So out of a latest survey that came out in New York, every recession, year over year, divorces spike almost 20%, okay, in the first year of a recession. So what happens when divorces occur? People just want to get out of it. They liquidate their assets, and they're usually willing to take a little bit less than market value because they just don't want to have to deal with each other anymore, and they just need to get rid of things quickly just to get rid of it and move on. So watch for divorce sales hitting the market a lot more. Number 4, lower interest rates fuel the ability that it can help. So you don't have to always necessarily get the last cent saved off something because the cost of financing is so much lower. It allows for a little bit more of a margin of error, right? Because if you can get the property at a low price, but you're even getting it at unbelievable financing, whether that's through a home equity line of credit or a mortgage loan or even an auto loan, or you're able to do a private money deal and banks want to lend out, investors want to keep their money in the market, and with lower interest rates and lower cost of borrowing, it gives you a little bit more room for profit, which is a really another great thing to do. And lastly, invest based on cash flow. When you're worried about a property maybe potentially losing a little bit of its market value, you buy on cash flow. Meaning, I don't really care on some of the properties that I buy if they appreciate tremendously. Why? Because they cash flow great. Why? Because the rents compared to what the mortgage note is exponentially higher than the average typical property, say in a high area like California, or even some other areas like the Bay Area specifically, or even in Seattle, or a lot of these other high areas. You want to buy in cash flow rich. So I actually did and gave you guys 6 secret markets that I personally look to invest in. And these are in order of the actual strength of cash flow in those markets, meaning market rents to the average price, okay? Just like what we've talked about, your gross rent multiplier. These are the strongest markets for the lowest gross rent multiplier, meaning gross rents earned on a property, how many times or years all those rents would take to pay off that mortgage loan that you borrow, the value of the house. So meaning if something rents for $10,000 a year and that house costs $100,000, it's a gross rent multiplier of 10, right? 10 years of earning $10,000 would pay off the property. So these have the lowest gross rent multipliers, best cash flow investments. 1, Detroit. 2, Birmingham, Alabama. 3, Cleveland, Ohio. 4, Baltimore, Maryland. 5, one of my personal favorites, Memphis, Tennessee. And 6, Philadelphia. So those right there are your 6 strongest cash flowing markets as of the second quarter 2020. So I did the research for you guys. You can also find it out on biggerpockets.com too. They did a great, even further breakdown of all 25 of them. So take care. And like I said, be on the recession watch.